Rand has slipped further today as traders prepare for a raft of local data, and the US dollar firmed ahead of a flurry of rate decisions, including one from the US Federal Reserve. Petri Redelinghuys is a trader and founder of Herenya Capital Advisors, with us now to have a look at the latest market moves. Petri, welcome. The Rand slipping, as I was saying, in early trade. What factors are driving that at this point?
Good morning, or good afternoon, I guess it's 12:30. So there's a number of different things, I think. You mentioned both of them leading into the introduction. One, of course, being, US economic data being expected out later, and of course the pending Fed decision on interest rates. I know that has been a theme for some time, but it will probably continue to be quite a big theme, in markets in general for the foreseeable future. So there's a lot of anticipation. We're seeing that US dollar index sort of rising up a little bit, and that, of course, putting pressure on emerging market currencies. But also, on the local side, we are back at, stage 5 load shedding. There's talk of us potentially being pushed to stage 8. So there are all these sort of economic headwinds, and obviously we're playing the presidential, chair shuffle game at the moment. Do we have a president by February? Do we not? Do we have a new one? What's really happening? So there's a lot of uncertainty and headline risks, I think, that are negatively impacting sentiment. And also, I think that if you look at the way that the market is kind of positioning itself, we saw last week that the market really failed to break through a relatively medium-term downtrend resistance level. So the market's been in a downtrend essentially since December last year or January this year. And we see last week that the market failed to break that downtrend, and it seems as though the market is heading lower into the final part of the year or into sort of Christmas, and that bringing a little bit of fear to the table. And I think that people are looking at a combination of those factors, particularly our local factors, which is more than likely behind the weakness of the Rand today.
Right. And let me get your thoughts on the latest tourism accommodation data from October 2022. That's now been made public by Stats SA. How do we read the data for the month of October, and how do we then take that to make some sort of forecast for the festive period?
So it's interesting to see. Obviously, the rate of growth month on month is slowing down. It's the base effect kind of thing that's happening there. But overall, if you look at the data, it's actually looking rather encouraging. Look, there is still quite, relatively high vacancies or low occupancy rate, if you will. However, we are approaching the pre-COVID. So pre-COVID, we were sort of trailing just below 50%. On occupancy in sort of the accommodation industry as a whole. And we're trailing now just below 40%. So we're about 10% off from where we were before the COVID pandemic, shut down the entire world. So it seems to me that there is this gradual, steady recovery that has been taking place. And, bar a few months here and there over the last 2 years, we've been steadily ticking up every month. Even though that rate of increase is slowing down some, that recovery is really starting to take shape, and we're almost back at the pre-COVID levels. So, we have to also keep in mind that this is data from October. So we are now already in December, so we are looking back some time. So we've essentially got one more data point here that hasn't been published yet, which was last month, and then, of course, December. So I would imagine, looking at the sort of industry as a whole, that we probably are getting very close to if not yet, we won't yet be above the pre-COVID sort of occupancy levels, but we definitely are seeing a great recovery in this industry, and it's looking as though within the next 6 months we should be back to where we started, sort of in 2019.
The Competition Tribunal has now approved the sale of Massmart's struggling Cambridge grocery business. That will now be sold to ShopRite in this agreement. Let's run through the terms and conditions for the acquisition.
So there are a number of conditions. So just a little bit of background first, I think. So obviously Massmart has been struggling. One of their bigger investors is Walmart in the US. Walmart has now delisted Massmart essentially to run it as a private entity, and have started a process to try and bring the company back to profitability by divesting from all the unprofitable businesses or all the things that are struggling with, and really focusing on a few core ideas, and just to try and rescue the business essentially over time. So ShopRite kind of circled and said, well, look, we are willing to pick up some assets. They want to do a merger where they buy these Cambridge stores. I think there are 42 Cambridge Food and Rhino cash and carry stores all throughout South Africa, as well as Massmart cash and carry. There's our 12 of those in the portfolio as well. So, ShopRite stood up and said, look, we want to buy this business. We feel it's a good fit for us. We can, probably rebrand and grow these brands and help them, unlock value by including them in our supply chain and all those types of synchronicities. Obviously, there was some opposition to this, most notably Pick and Pay, you would imagine, not so keen on this idea happening. In any case, the Competition Tribunal has now sort of made a ruling and said, look, you are welcome to divest, Massmart is welcome to sell these stores to ShopRite. However, 10 of these stores in key locations are not allowed to be sold and must be sold essentially to a small to medium enterprise rather than a big listed business. And obviously there are certain VE constraints that are required for that. So I think they're very focused on the upliftment of the communities in which these stores are based, rather than just winding them into a bigger, profit machine, as the words would be. And then also there is an employee share ownership program that needs to be created within 60 days of the merger. So this program has to be created as well. And ShopRite also has to undertake to enroll students in its sort of SNME mentorship program and the government's Yes for Youth program as well. So there are a lot of sort of socio-economic things that are being considered here that have to be taken into account before this deal is allowed to go through.
Briefly, as we conclude, Aspen has received $30 million from the Gates Foundation and the Coalition for Epidemic Preparedness Innovations. Where will that money be used?
So essentially, I guess I don't really know yet, to be honest with you. They put out a press release earlier today saying that they've received these funds, $15 million from each of the two institutions that you've mentioned. The goal here really is, some time ago, leaders throughout Africa and the African Union and what's called the African Centers for Disease Control sort of came together and said that they have a plan they would like to see 60% of the continent's vaccines produced locally on the continent by 2040. Currently, 99% or something like that worth of the vaccines that we use in Africa across a variety of things. I mean, vaccine we immediately associate COVID because of recency bias, but there are vaccines for all sorts of other things as well, and most of these vaccines we're currently importing. So the plan really is, at least for the African continent, to become at least 60% independent from international suppliers and to produce the stuff on the continent. So these two foundations are, I guess, on board with this vision and have made this donation essentially to Aspen in order for them to bolster up production and also to maintain production facilities that might not necessarily always be used, right? So you have to have, if you look at what happened with COVID, the ability to respond very quickly and start producing a vaccine locally is something that is very challenging to do. So to have the facilities in place to be able to respond very quickly is, I think, what this is for. And also there is some sharing of knowledge, right? So some of these vaccines are obviously how to make them is very top secret kind of stuff. And a lot of this information is now being shared with Aspen so that they can start the production of some of the vaccines that we need here for the African continent on a local level. So overall, I think the market seems to have responded relatively positively to that. I thought, to be fair, $30 million isn't that much money if you think of the size of a company like Aspen. But it definitely is, I think, coming to fruition for Aspen in a way, because they've spent a huge amount of money on developing a new plant in South Africa, manufacturing facilities, and now they're getting access to new vaccines that they can produce under license locally, and they're getting some financial support as well. So overall, this is kind of just the fruition of a plan to, within the next, 18 years, be mostly independent, if you will, for vaccine production for things like polio and all sorts of other ailments that plague our continent.
Petri Redelinghuys, thank you.